Now, my name's Luke, and I talk all things real estate, renovating, and financial freedom on this channel. And I purchased a $1.4 million unit block in 2021, in December 2021, with my beautiful, now late wife, Emily. And the reason we purchased a property in Coffs Harbour was for a balance of cash flow and capital growth. In my opinion, when I looked at major regional markets, I was less growth focused. And the reason is the data over the last 20 to 30 years has shown that the major cities, in terms of housing, have significantly outperformed major regional markets. And Melbourne was actually the front runner over the last 30 years, closely followed by Brisbane, Sydney, Adelaide, Perth, all the other major cities. And then below all of those sat these major regional markets, which were your Cairns, your Townsvilles, your Bundabergs, your Coffs Harbours, your Port Macquaries, and so on. But why on earth did I buy a property in Coffs Harbour, which is in the mid-north coast of New South Wales? And how did I come to that decision in 2021 after solely focusing on the Brisbane market prior to that? Now, to answer that question, you need to understand my approach to property investing and how I see myself building a larger property portfolio. To be honest with you, I didn't think I'd be sitting on a $9 to $10 million property portfolio by the age of 30, which is my age right now. When I was in my early 20s, the goal was to reach a property portfolio of around $3 to $3.5 million, because I worked out if that $3 to $3.5 million compounded year on year at 5%, I'd be making something like $150,000 a year of growth, which far outweighed my day job income. And I couldn't save that amount of money if I tried on an everyday ordinary income. Now, my income for the first 6 years of my career from the ages of 21 to 27 was $45,000, $50,000, $65,000, $80,000, $100,000, and then eventually $120,000. And my wife, who unfortunately passed away from cancer in December 2024, Emily, she also mirrored the incomes that I earned. And she actually she beat me to $100,000, my beautiful, now late wife, because we had an internal joke between us as a couple about who could get to $100,000 day job income first. And the way that she did that was, instead of going in the private sector, like I did as a chartered accountant, she went more aggressive at her day job in the public sector. Working with the ATO was her final position in their user experience space, because she had a background in behavioral science. And so while we were on those everyday average incomes, we were actually able to build the property portfolio to $5 million. And so how does that come together with this Coffs Harbour unit block purchase? And why did we buy in that major regional town? Well, there were a few reasons. One was we had a growth first strategy. So we were very focused on growth first, cash flow second. And the reason is, in my opinion, you want to focus on growth first, because you want that asset base compounding year on year. And that's how you're creating net worth or equity. And then you can leverage that equity to buy more assets. And so by going growth first, you build equity year on year, and then you can use that equity to buy cash flowing assets, which allow you to hold the property portfolio and start building your passive income. And so that's exactly what we did. We bought 3 houses in Brisbane with a growth focus. Property number 1 was in Kelvin Grove. Property number 2 was in Everton Park on the north side of Brisbane. And property number 3 was this one right here, located in Green Slopes, only 4 to 5 Ks on the south side of Brisbane. Now, the values of those properties were $800,000, $550,000, and $700,000, to give you round numbers. And so looking at that built our property portfolio to a foundation in terms of purchase price around $2 million. Now, for us to jump from $2 to $3.5 million, what we did was we pulled out all that equity. As the market had grown and our day job incomes had grown, I went back to CBA as a chartered accountant and an auditor at that time and got more money or more debt from the banks. Then once I got a job in the commercial industry, in around years 4 to 5 of my career, my wage jumped from $60,000 to $80,000. And then we were able to refinance, with M's income being $80,000 to $100,000 around that time. We were able to go back to the banks and refinance the property portfolio to draw out equity. And we drew out at 27 years old, when I was 27, so three and a half years ago now, $700,000 of cash. And CBA dropped 700 grand in my bank account as a 27-year-old. And I could spend that money realistically on whatever I wanted. Now, thankfully, in my opinion, I had my head screwed on and I didn't go buy a Ferrari or a Lamborghini. And Em and I were using that money for renovations, and we were using that money to buy that Coffs Harbour unit block purchase. And so we bought a unit block with 4 dwellings or 4.5 dwellings because the house is split at the front. And that brought in rental income around $1,425 per week at the time, which roughly equates to a gross yield of 5.2% at the time. And you might be thinking, you bought in a regional town with a unit block on 1,000 square meters, renting for a 5.2% gross yield. Are you crazy? Well, no, I'm not crazy because we'd run the due diligence on this specific deal. The property had value add opportunity by upgrading the kitchens and the bathrooms. The property was actually also under rented. It probably should have been renting for about $1,700 to $1,800 per week, which was more like a 7% gross yield rather than a 5% gross yield. And so the view with this deal was if we could raise those rents back to market rate over a 12 to 24 month window, then the yield would improve. And we could then use that cash flow to spend money back on the apartments to renovate the bathrooms and the kitchens, which is exactly what we did to increase those rents further. And so that's what we've done since 2021 to 2025. Was we went back and we renovated, it never made it to YouTube, unfortunately, but I actually painted one of the units down there, and we had a handyman do a bathroom upgrade and a kitchen upgrade and so on. And the view with Coffs Harbour with that regional location was less growth focused and more cash flow focused. Now that asset is in a scarce location. It's only 2 kilometers from the water and 2 kilometers from the center of town, and it's sandwiched right in the middle. So we still bought with good location fundamentals. And that Coffs Harbour region has over 100,000 people and multiple different industries, not just tourism. It's got agriculture, it's got industrial, it's got hospitality, it's got aged care. And so that region has a lot of diverse economies to it. And that was the other thing that gave us comfort buying in a major regional town. And so how does this all come together so that you can make good decisions if you're looking to buy in a regional location or a major city? And it comes back to that core fundamentals of the biggest strategy. As you go from our journey from $5 million to $10 million, we then went back into the Brisbane market and we bought mid-price point properties around that $800,000 price range. And then more recently, I bought 2 deals in Ipswich City Council around that $650,000 price range with development upside potential. And so everyone's journey is going to be different, but I think the core fundamentals are the same. It's balancing growth focused with cash flow returns. And generally, you might need to pigeon pair, as we did. So we bought 3 growth deals, and then we bought a cash flow deal, which balanced out our property portfolio. And after that, we went back to growth deals, and now I'm starting to lean personally back towards developments and cash flow deals to balance out the portfolio again. And so look at your own situation and look at your own journey. There are some buyers agents that want to chase these major regional markets. Darwin's a good example at the moment of investors chasing a market with a smaller market cap and less underlying economy to it. And so I'd be very wary of buying in a Darwin or a Townsville or even a Coffs Harbour unless it suits your personal investing strategy. I would personally feel more comfortable buying in a Brisbane, an Adelaide, a Sydney, a Melbourne, a Perth, those major city markets, than the major regional markets to form the foundation of a property portfolio. And then from there, you might want to take some higher risk plays, like a unit block in Coffs Harbour for $1.4 million. And it's grown significantly. The rents for that property sit over around that low 2,000s a week for the entire site now. And so that means it's back towards a gross yield or a value of around $2 million and a gross yield of 5.2% on market value. And that's because we've seen people want to buy these styles of assets. So there's been a bit of yield compression, which means that the values of these types of deals have grown and the yields haven't grown relative to the value or the market perceived value of these properties. So that's something to consider, is balancing out that growth and cash flow. And that means working with the brokers and the banks. If you want to work with my broker, you can head over to purposeproperty.com.au and click on mortgage broker, because Nevada and the team at Cube Home Loans know exactly how this is done. They've seen the ins and outs of my personal property portfolio and exactly how Emily and I got to where I sit today, where I'm blessed to be sitting today. And don't make it all about the money. Once you buy the assets you need, you can then make more lifestyle choices sooner. Yes, you might want to pay off the debt faster and keep running hard and keep saving hard, but I've actually changed my perspective after losing Emily to cancer in December 2024. And I don't want to delay everything for the future. I've worked so hard renovating, adding value, building a business in Purpose Property. I've got 7 staff and 2 managers now at Purpose Property, and 2 beautiful children, Asa and Eli, who are 3 and 1.5. And it's about that balance. You've got to find this balance through your property investing journey. Don't get caught watching someone else or my journey and think you need to be where I'm sitting today. You've got to find that balance of what works for you. And there is purpose to delayed gratification, but there is also purpose to enjoying spending your money now and going on holidays and picking up your kids early from school and working less hours. So try and find that balance that suits your family and your journey. So I know this has been a bit of a different style of video, unpacking my thoughts behind some major regional markets and how we grew our property portfolio and why I've made the decisions. But if you enjoy this type of content, make sure you drop a like on this video and subscribe to the channel and leave a comment down below. I'd love to hear your video ideas. If you've got any questions or thoughts, leave a comment in the comment section down below. And if you want to work with myself and the team and buy a property in Southeast Queensland in the next 3 to 6 months, head over to purposeproperty.com.au to book in a free chat with myself. And we're going to sit down for 20 minutes and have a conversation about where you're at right now and how we can help you buy the right property for the right price in the right location. Thanks for sticking around. Give this video a click right here, and I'll see you in that one. All right. Peace.